State Bank of India has posted once again a record profit, but before we come to analyze the profitability, we have been joined by Mr. Dinesh Khara, who is chairman of SBI. Mr. Khara, congratulations on good set of numbers. But before profitability, one thing which all the shareholders watch is ROA and ROE. Now, this quarter, you have clocked in an ROA of 0.96% and ROE of 19.43%. What next for the next fiscal year?
Ankur, this ROA of 0.96 is for the year. If we look at the ROA for this quarter, it would be somewhere around 1.26 or 1.28. And ROE, of course, is 19.68 is something. What is the number? So I think for last 3 quarters, we have been consistently maintaining ROA of more than 1%. And only in the first quarter, since we had the MTM losses of 7,000 crore, we have got a ROA of 0.96 as at the full financial year. Hopefully, I think in the next financial year, we should have ROA of much more than 1% and ROE of 19%, which 19% plus, which we have already clocked. We should be in a position to see that it stays sustainable.
Right. As far as lending growth is concerned, it has also come at decent pace of 17% or so. But I want to ask you about the corporate sector. That has also clocked in around 12%. Do you think this momentum will be continued in the next financial year as well?
Yeah, I expect that as far as the corporate book is concerned, I expect the growth should be somewhere in the range of 10 to 12%. Though for the bank loan book, we are expecting a growth of somewhere between 12 to 14%. The kind of opportunities which are being tapped by the private corporate sector on ground, and also the core sector of the economy, the kind of demand which is seen by them, I'm quite hopeful that this growth expectation numbers, which I've just indicated, that will become a reality in the next year.
Right. One problem which not only your bank but across the banking sector, the problem has been deposit growth is lagging behind the lending growth. In your books also, if I see this quarter, it is almost half of the credit growth. Do you think that in the coming quarters this will catch up?
See, the issue is the deposit growth might be lagging behind the loan book growth, but we still have excess SLR to the tune of about 4 trillion. So in fact, much of the deposit mobilization effort in terms of increasing rate, etc., is a function of these kind of opportunities which are available with the banking system. Since we have got a comfortable position, we have been increasing deposit rates in some of the buckets where we feel that there could be a decent opportunity for us to mobilize deposit and as well as to take care of our depositors' interest. So those are the buckets where we have been increasing interest rate, and that is one of the reasons why during the whole year the deposit cost has gone up by 13 basis point from March of 22, whereas the policy rates went up by about 250 basis point. So this is something which you have seen. Having said that, I would also like to mention that our credit deposit ratio in the domestic market is somewhere in the range of about 65% or so. So we have got enough ability to support the credit growth without really going whole hog for the deposit at a higher cost.
Right. Another outlier, if I would say so, has been the provisioning, which has been down sharply. Now, this is happening quarter after quarter. The whole market is getting it wrong. How should one read into it, this provisioning coming down sharply?
It is essentially attributed to the quality of underwriting and effective follow-up on ground. So I think the market is probably underestimating us in terms of our ability to recover and our ability to underwrite the right kind of assets. That's the reason why probably they are going wrong on their expectations.
Right. As far as now the asset quality is concerned, as you are alluding also, will this kind of asset quality, the improvement in GNPAs and NNPAs continue in the coming year as well?
Hopefully, we should stay where we are. My expectation is because we are at perhaps the lowest ever credit cost of 0.23%, and also our net NPA at 0.67%. is something which is perhaps one of the lowest. So I expect that we should be in a position to sustain this kind of a credit quality going forward.
You also mentioned that there will be some pressure on the credit growth in the coming year. Can you explain a bit how will that fructify in the next financial year as far as the credit growth is concerned?
Corporate credit growth, I'm expecting to be somewhere in the range of 10 to 12%. And our, as far as State Bank is concerned, we are expecting credit growth of between 12 to 14%. And when I mentioned about what that was essentially in the context of the system as a whole, because there are many banks who are having a credit deposit ratio of as high as 85, 86%. So they may not find, they may find it difficult to continue to grow their loan book. So that is why at a system level, there could be a likely challenge.
Right. One last question I want to ask about the operational support subsidiary, which has already been started. How much of the help bank is getting after that subsidiary is operational now?
No, it has certainly helped the bank because you would have observed that the NPA reduction in agricultural segment, which you have seen, it has come down from about 30% plus to 11%. And part of this reduction has happened because our operational support subsidiary could support more than 5,000 branches. And in terms of ensuring that they have a timely review and renewal of the loan accounts. So that is something which you have already started seeing. So I think going forward, the value enhancement will be much more from this operational support subsidiary.
Thank you so much for talking to ET Now.
Thank you. Thanks a lot.